Hey everyone, of late a lot of new investors have started their investment journey in Indian stock market, especially post-COVID. And I'm sure every year millions of new investors will start their stock market journey. Now I always say that there's a huge growth potential in Indian stock market, but still many people end up losing their money, especially the young folks. The simple reason is mistakes. Let's be honest, you can't learn stock market from day one. You are bound to make mistakes. In fact, I can guarantee that there won't be a single person on the planet who can claim that I have not made any mistake in stock market. If someone says that I have not made mistakes in stock market, then the person is either a liar or a god. So except that if you are a newbie in the world of stock market, you are bound to make mistakes. And that's how you will learn. While you can't completely avoid the mistakes, what you can do is at least learn from the mistakes of other people and try to minimize those mistakes. Now it's been around 10 years since I started my investment journey in stock market, and I've made tons of mistakes. Let me be very honest about it. But the best part is that I've learned from my mistakes and followed the advice of great investors, including the likes of Mr. Warren Buffett, Peter Lynch, Charlie Munger, Mr. Ramdev Agrawal from India, and many more. So I thought of making this video to share my investment mistakes, and hopefully there will be a lot of important takeaways for you. And would love to hear your thoughts on your key mistakes in stock market. If you can put your experience in the comments, I'm sure it would help the entire community. Alright, let's get started. So first mistake I made is I avoided blue chip stocks. When I started my investment journey, just like every beginner, I looked at stock market as some sort of magic machine that will double my wealth in no time. Now obviously large cap stocks don't give you that sort of high return in no time. So my thought process was, stocks like HDFC Bank, Titan, Asian Paints, Pidilite have already created multi-bagger returns. So let me search for next HDFC Bank, next Titan, Asian Paint and so on. That was my first mistake. I started looking at small caps, micro caps that nobody really heard of. Later when I became wiser with my experience, I realized that it is very important to have good blue chip stocks in the portfolio that can generate consistent compounding, especially when you are a beginner in stock market. And look at the kind of return those blue chip companies have generated in last 10 years. Titan more than 1200% return, Pidilite more than 1000% return, Asian Paints more than 600% return, HDFC Bank 400+% return. And I strongly believe that these leaders are bound to grow for the next 20-25 years. Now you will keep hearing about small cap stocks, mid cap and even micro cap stocks that generate 2x, 5x, 10x return in no time. But remember that they are equally volatile, and during the down cycle, they fall brutally. And trust me, when the share price falls, very few people have the guts to stay invested. So it's very important to build a balanced portfolio of large cap, mid cap and small cap as per your risk appetite. If you are new to the world of investment, start with large caps and then learn this art of investment. And slowly when you gain confidence and experience, then consider increasing your allocation in mid cap and small cap. And remember, don't avoid blue chip stocks. Then my second mistake was I ran behind penny stocks and low price stocks. So during the initial days, I had a very limited investment amount. So let's say 5,000, 10,000 rupee a month. And the idea was to double my wealth in no time. So I thought that if I invest in let's say stock at 5 rupee or 10 rupee, it will double in no time as compared to a stock at let's say 500 or 1000 rupee. Moreover, if I invest let's say 10,000 rupee in a stock available at 10 rupee, I would get 1000 stocks as compared to a stock at 500 rupee where I would get only 20 stocks. So I related more stocks with higher return. Again a big mistake. I still remember during those days, Suzlon was at 8-10 rupee and I ended up investing without having any idea about the fundamental, and it further fell down 70-80% from those levels. Although I sold it long back. So the lesson was that stock price has got nothing to do with returns. A stock at 1000 rupee can create much greater wealth than a stock at 10 rupee. It's the valuation, fundamental and growth prospects that matters. Likewise, today I see a lot of interest in stocks like Vodafone Idea, and there are hundreds of penny stock with poor fundamentals, low liquidity, then your high public holding, basically operator-driven stocks where retail investors end up getting trapped due to greed. Trust me, it's not easy to identify multi-bagger penny stocks. For every one penny stock that outperform, there are 5 penny stocks that underperform. People will only talk about that one penny stock that outperform. But if you are newbie in stock market, chances are high that you will end up having those 5 underperformer in your portfolio. My third mistake was I blindly purchased the stock based on your ace investors portfolio, then social media articles and friend suggestion. Now we keep hearing about stories like X stock from Rakesh Jhunjhunwala portfolio has outperformed, Mukul Agarwal entered into multi-bagger stock, Ashish Kacholia portfolio hit lifetime high, then Vijay Kedia portfolio stock jumped over 100% in 1 year. And we think, if these ace investors have invested in those stocks, it must be good one. But the problem is, these ace investors have portfolio worth crores. So they have very high risk appetite and can afford to lose a few crores. Just ask yourself, can you afford to lose a few lakhs? Very few retail investors have that kind of risk appetite. And you will never know when they exit their position and stocks start falling. Then there are news articles and thousands of YouTube videos giving stock tips. They'll have sensational headline to attract the eyeballs. And many people end up falling in those traps out of FOMO. I also fell into those traps during my early days. Then I also used to discuss my stocks with my friends, colleagues, and would buy stocks based on their recommendation. Later I realized it was a major mistake. Then my fourth mistake was I had no idea about fundamentals and valuation. See, the problem is that when we don't have any knowledge about the business of the company, its growth prospect, key financial ratio, valuation, key risk, then we can't identify whether the company is worth investing our money or not. So during the early days, my investment decisions were very random without having a solid reasoning. I hardly had any idea about the fundamentals because I never invested much time in research before investing my money. And I was completely blank on valuation part. To be really honest, this is something you only learn with experience, no matter how great your education degree is. Moreover, the only way to understand the fundamentals of the company is by spending time. During my early days, I did not have a lot of time. Now, I look at every possible report before investing my money, including the annual report, investor presentation report, con call transcript, then credit rating report, then brokerage view, and then take my investment decision. In spite of that, I'm sure I would end up selecting a few wrong stocks. But now my probability of success is much higher due to my knowledge. My fifth mistake was I used to invest in stock at 52-week low and avoided or sold stock at 52-week high. So during those days, I used to think that if a stock is at 52-week low, that's a great opportunity to add the company. And if a stock is at 52-week high, I can't buy it. I was completely wrong. Later, I learned that everything boils down to growth prospect. If a company has touched 52-week low, then there must be a reason for it. So it's very important to understand the reason for correction. If the correction is due to external reason like inflation, slowdown in demand, increase in input cost, and due to that, if the entire sector is struggling, and if I expect the company to do well in the future, then I can add it at 52-week low. But if there's a fundamental problem with the company, then it is like catching a falling knife. I still remember when in 2019 Yes Bank collapsed, many retail investors rushed to buy the stock without realizing the reason for correction. And it kept on falling before it touched levels of 10 rupee. Likewise, if a company has touched 52-week high, it does not mean it can't go up. Here, valuation and future growth prospect plays a very important role. If the growth prospects are bright and the valuations are reasonable, then stock can be added even at 52-week high. So that was again a major learning. My sixth mistake was I kept looking at the portfolio 100 times a day. As a result, I would always be anxious and would get too greedy if the stock outperformed and would get very fearful in case of underperformance. Basically, if the stock would fall consistently, I would panic and sell it. And that was the major reason I ended up selling some of the very good stocks during the initial days of my journey. I used to think that if I have to generate high return, I would have to keep churning my portfolio and keep buying and selling stocks. I was wrong. In fact, if you have invested in fundamentally strong companies, then it's better to simply sit back and relax without worrying too much about the ups and downs. Chances are high that you will make more money by doing nothing 99% of the time. Then my seventh mistake was I lacked patience and conviction. Like I said before, the moment I started investing, my goal was to double my wealth in no time. So even if I would invest in a good company, and if the company does not generate good return for the few months, or if the share keep falling, then I would lose my patience because I never did a thorough research on the company. So I never had the conviction to remain invested. Any bad news and I would lose my patience. Moreover, even a 20-25% return would make me sell this stock, as my goal was to keep churning the portfolio due to lack of patience. Eventually, I realized the importance of power of compounding and why patience and conviction is the most important aspect of stock investment journey. Because if you lack patience, no matter how good the stock is, if it does not perform well for a few months, chances are high that you will sell the stock. And this is again something that you can't learn from day one. You have to condition your mind to learn this art of patience. In fact, due to these mistakes, I actually ended up with losses during my initial investment journey. But the only good thing I did was I did not invest a lot of money. Mainly because I had limited savings, as I also had education loan at that time. And whatever money I lost during the initial days, I consider it as a fee for learning this art of investment. Today, majority of my investment has happened in the last 2-3 years when I quit my job from London and invested the money I saved there and whatever I've earned in the last 2-3 years. And now while investing, I try to avoid my previous mistakes. So yeah, it's also the beginning of my journey as a full-time investor as well as personal finance coach. But one thing I did right that time, I never got too greedy to end up doing stock trading and futures and options. It's not that they are bad, it's just that trading is not a cup of tea for everyone. Very few experienced traders with sophisticated machines and softwares make money, and that too with years of experience and complete dedication. If you have a job or business and you think that you can crack stock trading and make a lot of money on consistent basis, that too without much experience, it's next to impossible. I've seen many people losing huge amount of money in trading, including my close friends. So yeah, this is it for this video. I hope I've covered the major mistakes during my initial stock market days, and now I would love to hear from you. What are your key mistakes and learning from stock market? Put it in the comments. And if you find this video useful, do share it with your friends. I'll see you in next video. Till then, take care.